Hey, Intro to Accounting, Mr. Roberts here, and today we are going to jump back into Chapter 2 and Section 2 and revisit some of those transactions that you guys created in Canva. So I'm going to go through this section a little bit quicker because when you guys created those slides or that presentation in Canva, you had to think about how each transaction was going to be affected. You really had to process it. So essentially, you should understand how these transactions are affected in their debits and credit parts. If you're still a little bit wary on that, let me know. We can go over it again. But I'm going to go through this chapter kind of assuming that we're getting a little bit better at the debits and credits. We understand debits are on the left, credits are on the right, and that assets are increased on the debit side because they're on the left-hand side of the accounting equation, and liabilities and equity is increased on the credit side because it's on the right-hand side of the accounting equation. So if you have any questions on that or as we go through this, please raise your hand, let me know, or shoot me an email. So the learning objective today is restate and apply the 4 questions necessary to analyze transactions for starting a business into debit and credit parts. So what we did on those little presentations that we had is we looked at how those accounts were affected, but we didn't really, the big thing that we're going to be adding in is money, okay? So money will be added in some form of currency or whatever else here, or value. So that's really going to be the biggest difference that we have for this chapter when we start getting into the problems. So the 4 questions that we had, let me just move this screen a little bit, get my head out of there. The 4 questions that we had, just remembering what they are. The first one is which accounts are affected. And we've been doing that since chapter 1. We look at the transaction, and some of you guys are getting really good at this. Some of us might need a little bit more help. But we look at it and we break it down like a detective, okay? Received cash from an owner as an investment. And right away, we should know one of the accounts that are affected. And it should be cash because we received cash. So from the business standpoint, what happens to cash? It goes up. Well, I guess we'll get there. But then what's the other thing? The owner gave us an investment. So when we look at an owner, it's usually going to be the owner's name and then capital. So here it's Michael Delgado's capital. Second question is, how is each account classified? Well, when we look at this, we knew that cash was affected and we knew that Delgado's capital was affected. And because in chapter 1, we've looked at account classification and we know that cash is an asset, that's all we need to know. We know cash is an asset and we know capital is an equity. Number 3 is, how is each classification changed? Now we're learning what we did yesterday, right? Or we're relearning it again. So assets increase, owner's equity increases. We look at this transaction and we go, okay, what exactly would happen here? Cash goes up and the equity also goes up. And then the last one, how do we actually increase or decrease those accounts? So because assets on the left-hand side, it increases on the debit side, the left side. Michael Delgado's capital needs to increase as well because it's on the right side of the accounting equation. It increases on that capital, the credit side, the right side. So there we go. That's our first transaction, and we have 5 of them. And we're going to ask those questions for each one. Paid cash for supplies. Well, supplies needs to increase and cash needs to decrease. They're both assets, and supplies, to increase it, must be debited. Cash, to decrease it, must be credited. We look at paid cash for insurance, and this time prepaid insurance is going to be the asset that increases on the debit side. Cash is going to be the asset that decreases on the credit side. Skip past that. And then bought supplies on account. So here we know that we have supplies that are going to be affected, and we also have our liability accounts payable. So when we look at this, we know we have more supplies. So supplies is going to go up. I apologize for the click-clacking. That's my dog in the background. So supplies are going to go up, and then accounts payable actually has to go up too. So how do we increase a liability? Well, liability is on the right-hand side of the accounting equation. so it must be increased on the credit side, so we credit this account. And then what if we actually pay cash on that account? Well, now cash is going to decrease. Cash is an asset. Assets increase on the debit side, decrease on the credit side, so we're decreasing cash. And then accounts payable needs to decrease because we actually owe less money now to Canyon Office Supplies because we're paying down our debt on it. So we're going to debit that account to decrease that liability. And that is our transactions that we have. The one other thing that we have here is accounts, chart of accounts. So as some of you guys have seen the glossary before, it was covered in the very beginning of this chapter, okay, chart of accounts. I think we just missed the vocab word. But here's the glossary, and this is going to really help you out, okay? I want you guys to remember all these vocab words, but remember, this class with our virtual setting is open book, and we have all these resources at our fingertips. So if you see that chart of accounts, and you're like, you know what, I don't think we really covered it a whole lot. Chart of accounts is a list of accounts used by a business, okay? So it's just all the accounts that a business is going to have. If we go back, let's open up the book real quick. And I think in the first chapter, let's go to the introduction. Here we go. Here's a chart of accounts, and this is what it looks like. And this is for Delgado's Web Services. How many of these accounts have we seen so far? Right? We've seen cash, probably haven't seen petty cash. We've seen some accounts receivable. We see supplies and prepaid insurance. We've also seen accounts payable. We've also seen capital and drawing. We haven't seen income summary yet. And we haven't got into, maybe we got into sales. And then we have some expenses that we've talked about. Cash short and over we haven't. But this is Delgado's Web Services. So, and this is their chart of accounts. All the accounts that they're going to use in their ledger, which we'll talk about a little bit later. But it's just important to know that it's a chart of all the accounts they will use. So that's 2.2, going through it fairly quickly. And let's jump into the problems. I'll keep this all together. And I have 2.2 work together here on my screen. Let me pull it over for you here. Okay, 2.2 work together. And let me go back 1 second here. Couple different things. End of lesson review. We have audit your understanding, which will be hidden. Okay. We have this little animated activity. If you pop this open first, I guess we'll look at that. It's a couple videos. It's just different than anything that we've done before. I am going to have this be graded, and they have separate videos. You can watch those on your own. I have a feeling you're going to know a lot of these answers. It's just reinforcing the things that we went over so far in this chapter. So you can watch those videos and then answer these questions. Just a little different activity to kind of mix things in, right? But then we have our working papers and our application, and I have our working papers opened up over here. Let's see what they're asking us to do. It says, Jensen Cleaning Service used the listed accounts. Some of the accounts will be explained in lesson 2.3. Okay, so here's our chart of accounts. Prepare 2 T accounts for each transaction. On each T account, select the account title of one of the accounts affected by the transaction. Enter the debit or credit amount in each T account to show the transaction effect. Ah, man. I know some of you guys might have had this before on yours, where it gets stuck to the top. I'm going to have to restart this. Give me 1 moment. Working papers 2.2. There we go. All right. Now let's go like this. Let's see what happens. Did it again. When you hit that little icon, that little pin, every once in a while it'll get caught up on the top, and then it's really hard to, well, you can't move it around at all. So just something that's wrong with their software every once in a while. I don't know how to fix it. So sometimes when you hit this, it's going to stick it to the very top and you can't do anything. But anyways, so here's all the account titles that we have. We should recognize most of them. But then we have our transactions. So if you're sitting here going, what do I do? Make sure you go over here and hit transactions. Excuse me. So the first thing we're going to do is it says received cash from an owner as an investment. So this is for March 1st. If I open this up, it's going to give me cash, drawing, prepaid insurance, and supplies. Now, when we look at this and we ask ourselves those 4 questions, the first one is like, what accounts are affected, right? And if you look at this, you know that it's going to be cash, and then you also know that it's going to be the owner's equity. So when we're staring at this, why is owner's equity not an option? Well, this is going to be very, very important, so please remember this. When we're listing out anything in Applia, and in general, when we write things out in a journal later on, which you'll see, we always list the account that's debited first, okay? Always list the account that's debited first. We know that 2 accounts are going to be affected, right? Cash and capital. So we got to ask ourselves, well, we go through all those 4 questions. So what are those accounts? Cash is an asset. Capital is an equity. Do they increase or decrease? Well, cash increases and so does capital. How do we, then what do we do? How do we increase that? Do we have to debit cash or credit it? Do we have to debit or credit capital? And when we look at this, we go, okay, to increase that asset, I know that assets increase on the left side, the debit side, so I'm going to have to debit cash first. So cash is going to be debited. So let's put that in first. And that'll be on the left side. So that's 4,000. And then you'll see the second option is the capital. And how do we increase capital? It's on the right-hand side of the accounting equation. So we credit it because when we credit it, it's on the right-hand side. So there we go. You can't list it as capital and then cash, right? You need to be able to look at it and say, okay, what's going to be debited? You kind of have to figure that out in your mind before you list anything. This will be something that follows us through the rest of the class. So that's why I'm taking a couple minutes to explain it to you, because you're gonna want to know that. All right. So next, March 3rd, we paid cash for supplies. Now we have cash and supplies. Supplies is going to have to go up. Cash is going to have to go down. They're both assets. So supplies would be first, and it's going to increase on the debit side, $95. And then cash would be our other account, and cash needs to decrease, so we are going to credit that. For the 4th, we bought supplies on account from Supply Depot. So right away, we look at this and we go, what accounts are affected? Well, supplies, and then it looks like we bought something on account, so we have an accounts payable. What goes up? Both of them go up, right? But supplies is an asset, and we know to increase an asset, we have to debit it. So I bet you supplies will be listed first. And it is. We need to increase it. So we'll increase it $120. And then the other account that we have is accounts payable, because we're going to owe Supply Depot for that money. So it should be $120. Let's go to the 6th, paid cash for insurance. I know cash is going to go down, and prepaid insurance is going to go up. They're both assets. Assets increase on the debit side, decrease on the credit side. Gotta look at it one more time. Paid cash for insurance. So insurance is going to go up, and cash should go down. So prepaid insurance is $250. So the increase in asset, we debit it. To decrease cash, we credit it, and they're both assets. The 9th, we paid cash on account to Supply Depot. So now we paid cash, that asset is decreasing, so we must credit it. And our accounts payable is also going to decrease. How do we decrease an accounts payable? Something on the right-hand side of the accounting equation. We're going to debit it, okay?
Sorry, I don't have any information about that, but I found something else. Do you want to know how a transaction can only affect one side of the accounting equation?
Google's obviously listening. I don't know if you guys could hear that whole thing. All right. Paid cash account.
I'm designed to wait in standby until I'm activated, like when you say, "Hey Google." The status in
Hey Google.
device.
Hey Google, stop talking. Okay. So the 9th here, once again, paid cash on account supply depot. So our accounts payable will be debited. And that was $80. And our cash, which I'm having trouble showing you on the screen because it's not going down far enough. There we go. Our cash should be credited $80. All right. So let's show the answers here. My thing got screwed up, so we got to show the answers here. All right, so cash and capital, supplies increase, cash goes down, right? Supplies increase, accounts payable goes up. Prepaid insurance goes up, cash goes down, accounts payable goes down, it gets debited, and cash also goes down, it gets credited. Now, like, really think about this, because accounting is the language of business, right? So this is technically telling us a story, is it not? When we look at this, I could look at just the first, and I can tell that an owner put money into the business, and cash increased. I can look at the third, and I can tell that we bought supplies for cash. It tells a story. So start trying to look at it from that perspective. It really helps put things into context. So there we go. That's the work together. There's 2 sections on it, so make sure that you do the other one, and then also do the application problem today. So if you have any questions, please let me know. I'd be more than happy to help. All right, thank you.